Also ahead, Vladimir Putin congratulates Donald Trump and says his views on ending the war in Ukraine deserve attention.
And Nissan set to slash thousands of jobs and 20% of factory capacity after an ugly set of earnings results. Well, let's get to today's agenda, and the Fed taking centre stage today, obviously, cutting for a second straight meeting. No surprises there, 25 basis points. Powell had a few remarks on the labour market. He called that solid. Says we're on the way to achieving employment and inflation goals as well, roughly in balance, although the economic outlook is kind of uncertain. But it was really around the political scene that we were looking for commentary, right? And understandably, he was quite guarded. He says he's not ruling anything out for next year. Traders do see another 25 basis points in December. We can discuss the possibility of that. But in terms of politics, he said, well, it's too early to know the timing or substance of fiscal policy changes. But when it came to fiscal policy, he did have a few clear views. Let's have a listen.
The U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable.
And we know that there's history there, right? We know that the former President Trump and President-elect Trump has a history of being very critical of the Fed, of the Fed's function, of what he sees as its role in driving the economy. And he's even threatened to fire Chair Powell before in his first term. So it'll be quite interesting to see how all of this plays out. But, you know, as you heard at the top of the show, Chair Powell saying that he wouldn't step down or step aside if he's been asked to. But the core question, of course, is sort of how all of these Trump promised policies when it comes to cracking down on immigration, aggressive tariffs, extending tax cuts, you know, all of the sort of fiscal easing policies, what that means for the Fed. Certainly not much change in the outlook going into the end of the year, but it could be quite different next year.
Yeah, it could. He was pretty clear on that in terms of, you know, would he step down if asked. He had some thoughts on that too. Let's have a listen.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
All right, fairly unequivocal. I think we're going to be set up for an interesting 2025, though. Let's take a look at what's happening today, though. We got market open now here in Australia, and the ASX 200 off to a pretty bright start here. We're better by 0.4%, and we do have an early mover for you as well. ANZ Bank flat at the moment. We just had full-year cash profit of 6.7 billion Australian dollars from ANZ. That was a miss, down 9.3% on year. That was impacted, though, by the acquisition of Suncorp. If we take a look at Nikkei futures, they're sort of flat at the moment. The Nikkei was really the only major market to lose ground on Thursday, and not very much either. It was only off by about 1/4%. The yen, much stronger. It's had an interesting ride this week after briefly almost touching 155. Now got a 152 handle, just below 153 there. And the Chinese yuan unchanged, but still looking fairly weak, Heidi.
We do have a central bank decision just crossing the Bloomberg poll when it comes to the Central Bank of Peru. The central bank there cutting its reference rate to 5% from 5.25%. This comes after what was a surprise hold last month. Inflation in Peru continues to hover around the centre of that target range there, and in fact, the country has the lowest inflation out of LATAM's largest economies at just above 2%. That's just above the midpoint of that 1 to 3% target range for the central bank. They say that the key rate is approaching its neutral level, that this rate cut doesn't imply further reductions or future reductions, I should say, so quite a sort of a hawkish cut, if you will, that the inflation will remain within that target band. So that surprising hold being followed up by a move this month, but of course quite a degree of uncertainty in terms of how Latin America, emerging markets more broadly, are going to be impacted by Trump economic policy, and potentially, if we see further resilience in the US dollar as well, the implications for those EMFX in that space. But take a look at what we're watching when it comes to US futures, and of course we've talked talked about just what a day that we've seen, the best Fed day of 2024 across just about all assets. We saw US stocks again hitting that fresh peak after Chair Powell's bullish economic signals. We're seeing S&P futures looking pretty balanced at this point, as are tech futures trading on the Nasdaq 100. Yields, though, this is sort of the other side of the story, right? Treasury yields dropping across the curve. We saw the dollar seeing its biggest decline since August. So a lot of uncertainty to come in terms of what next year could hold for Fed policy, depending on what we get from the second Trump presidency. But we're also watching oil markets and how energy markets continue to react to this as well. Traders kind of looking at production as well as geopolitics under the incoming president. Let's bring in Dennis Lockhart now, who's a former Atlantic Fed president, and always great to have you, Dennis, on Fed Day. When we take a look at sort of the politics of this situation, it's sort of unavoidable to talk about this, right? Is it possible to have that outlook yet, or do we really need to wait until 2025 when the policy agenda is actually in place to see the implications for the Fed?
I think we have to wait 2025. I think there's a long way from rhetoric on the campaign trail to actually implemented policies, and so I think it's advisable, and I know this is what I think Jay Powell has in mind, is waiting to see what really materializes and how the policies are implemented, the timing of that, and what effect they're likely to have.
Do you think Fed independence, or certainly, Powell's job, he's sort of come out on the defensive already, and obviously there's history there, given that the former President Trump had threatened to fire him in his first term. Do you think that's seriously a threat this time around?
Well, it was interesting in the press conference a few hours ago how succinct Jay Powell was when asked about being fired, and he pointed out that the law would have to be changed. I think it will be a lower priority to try to affect the Fed, particularly in an environment in which interest rates are declining and the policy rate is being brought down. I think any argument that President Trump has with Powell is likely to be muted in these circumstances, but we'll see. I'm confident that the Fed's independence will be preserved.
Just returning to that question of fiscal policy, and understandably, Jay Powell really not willing to get into that in today's press conference, but you've sat in on these meetings. You're a former Fed member. I do imagine this will be getting aggressively discussed. What sort of conversations do you think will be taking place?
Maybe sideline conversations, but in the meetings themselves, there's practically zero discussion of anything political. It's just really all about the economy and what the right policy decision is. I attended 80 meetings over 10 years, and I can count on one or two fingers the number of times anyone even brought up something remotely political. So it's not a politicized policy-making process. And, the public needs to understand that. I think on the sidelines, certainly there will be some, social discussion, if you will, of members of the committee or among members of the committee on this matter, but it will not invade the policymaking process in the room itself.
Well, getting back to a purely economic question then, how about inflation risk in 2025 and the path ahead for the Fed? Because if we take a look at this chart on the Bloomberg terminal, we do see that we've seen traders trim their bets a little bit in terms of...
It will be a lower priority to try to affect the Fed, particularly in an environment...
bonds.
At the moment, you'd have to, I think, agree with Chairman Powell and the committee that the inflation outlook is for a decline in inflation. One thing that concerns me a little bit is the core PCE inflation at 2.7% and not having moved for the last 3 or 4 months does suggest that there could be some stickiness to inflation, and that may give pause at some point. Many other indicators are coming down, and as Jay Powell mentioned in the press conference, they're looking at shorter duration cuts of inflation, such as the 3-month or the 6-month or even the 1 month. They are all positive and showing decline in the rate of inflation. So, I think the base case is plausible and probably is what will happen. But we could see some stickiness and conceivably some effect of trade policy if implemented.
I don't want to sort of harp on the political aspect, but obviously one of the drivers of this election result was how Americans broadly felt about the economic outlook and how their families and households were doing under this economic outlook. I do wonder, we talk a lot about consumer strength, household strength, and, we heard in this statement from Fed Chair Powell that wages are still sort of a little bit higher than what you'd see consistent with 2% inflation. Is there a bifurcation or perhaps layers to this economy that is clearly...
This chart on the Bloomberg terminal, we do see that we've seen traders trim their bets a little bit in terms of...
The lower income cohort in the economy are feeling the effects of higher prices, the result of earlier inflation. Prices have gone up, but they have not declined. So for them, that's inflation, even if in a technical sense, inflation is a rate of change. It's not necessarily the level of prices. So I think that had an impact on the voters. And I think certainly people with tight family budgets, and that's much of America really, are still nonplussed by the high prices they see when they go shopping. And, that's affecting more than, I would say at least half the population in some way.
All right, Dennis Lockhart, former Atlanta Fed president. Thanks, as always. We're really grateful for your insights. Coming up on the Asia Trade, the Hinrich Foundation joins us to look at how Donald Trump's re-election will impact global trade flows. Stashaway joins us with their market playbook after the elections and the Fed cut. Plus, we talk expectations for Chinese fiscal measures with Societe Generale. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup.
This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Chinese lawmakers got a head start on the US election this week as they gathered to vote on the largest fiscal package since the pandemic. But now that Donald Trump has been re-elected, the vision likely to emerge from Beijing may go far beyond what's been telegraphed. Our Chief North Asia correspondent Stephen Engel is in Shanghai and joins us now. So we've been asking this kind of question as to whether what we've seen so far has been whatever it takes, right? How much dry powder is left for Beijing now that Trump has been elected?
Yeah, first of all, what a week this has been, right? The election on Tuesday, and then, of course, the Fed decision, and then now what the markets out here have been really waiting for, and that is how large and what is going to be the scope of any kind of fiscal package that the National People's Congress Standing Committee in Beijing is going to be voting on, or already has voted on behind closed doors. We're going to get details of whatever they announce sometime today. Hopefully we'll get some sort of comments as well to see what their priorities right now. We do know, according to on Monday, that they had been debating and talking about essentially a debt swap and raising the debt ceiling, perhaps, obviously to alleviate the fiscal burden that is on the local governments that have, in some estimations, a combined upwards of $8 trillion worth of off-balance sheet hidden debt. So that's one thing that's been on their agenda. But the other thing that the markets have been looking for, obviously, is fiscal stimulus, perhaps even in the form of housing rescue, in some form, also a bank recapitalization, and also measures essentially to boost consumer demand. All of this is intensified as well with the election, of course, on Tuesday, Wednesday, our time, of Donald Trump and his pledge, at least on the campaign trail, to raise tariffs on Chinese-made products into the United States by upwards of staggering Chinese economy, and whether that would take off some of the, the heat that we've already seen a little bit. October numbers in trade were really good. Housing numbers are starting to look good. Manufacturing picked up in October for the first time in 6 months. But are they going to lose that momentum without further stimulus? That is the big question. So we see Macquarie and Standard Chartered economists project China's GDP, Heidi, could suffer a hit by as much as 2% over 12 months following the implementation of that high of a tariff increase from a Trump administration. Macquarie, though, they also tempered that a little bit, saying essentially Donald Trump, the negotiator, might be able to talk with China, bring that down. Probably the more realistic increase would be about 10 to 20% increase, but still another tax on China's efforts to get their economy going again.
So is there anything we can say that we're likely to hear specifically out of Beijing today, and is that going to be enough to counteract the impact of potential tariffs?
Yeah, well, that's the big question, and that's another reason why don't get your hopes up too much today that there's going to be this gigantic bazooka number of fiscal stimulus coming from Beijing, because the consensus is, or there is some thought that perhaps they're going to wait a little bit, see if and what those size of those tariff increases from Donald Trump might be. And keep in mind as well, there are a couple of other key meetings on the docket, on the agenda, coming up next month in December. Essentially, you have the Central Work meeting in December. You have the Politburo, the Communist Party, also meeting in December. Generally, those are, precursors to what's going to be discussed at the National People's Congress in March. But still, there is room and time for Beijing to digest what possibly is coming down the pike and to also adjust other things. Look, China's already been adjusting since the previous Trump trade war 1.0 in 2018, 2019. They found other markets for their products, which also, by the way, found re-export into the United States. Donald Trump, there's a lot of question about whether he's going to impose those tariffs across the world. That would potentially close the re-export loophole. So again, there's a lot of moving parts here with Donald Trump coming into the White House, coming in January, and what kind of stimulus, how large, and the breadth of it coming from Beijing. So much to discuss on this busy Friday.
All right, Chief North Asia correspondent Stephen Engel there. Well, Donald Trump says he's not yet spoken with Vladimir Putin after his election win, but does plan a conversation with the Russian president. Putin, meanwhile, says that Trump's proposals on ending the Ukraine war deserve attention.
I do not want to comment now on what was said consciously during the election campaign. I think it was said deliberately in the fight for votes, but it does not matter. What was said in the desire to restore relations with Russia to help end the Ukrainian crisis, in my opinion, seems to deserve at least attention. I would like to take this opportunity to congratulate him on his election as President of the United States of America.
Well, Bloomberg's political news director, Jody Schneider, joins us now. So, Jody, what messages are President Zelensky in Ukraine and Putin in Russia giving President-elect Trump?
Yeah, so as we heard from President Putin there, the Russian president, he is saying that he wants to try to have talks with Ukraine. He's long said this, but of course the talks that he wants to have do not include, it is not a peace treaty per se, it is that they take into account what he calls the realities on the ground there, and that the land that Russia has taken from Ukraine would be part of those talks, would be part of that deal. Of course, the Ukrainian president doesn't want that, and he says in his discussion or his call with the President-elect Trump that he made it clear that a short end of the war would not benefit Ukraine. Of course, the real question is what aid could Ukraine continue to get from the U.S. after the President-elect takes office in January, given that he has made it clear that he does not want to spend more money in this war. And Congress also, particularly Republicans in Congress who will control at least the Senate, have made that clear too. So different messages from these leaders. The President-elect Trump, for his part, said he has not yet spoken to, since he won the election on Tuesday night here, said he has not yet spoken to Putin. He is not among the 70 phone calls he has had with world leaders, but that he expects they will talk soon.
Jody, of course, core to the Trump campaign were these promises of mass deportations. Do we have any idea as to how his immigration policy might materialize now?
Yeah, so Heidi, Trump did tell NBC in an interview today that he would go ahead with the mass deportations, saying even if it was costly, it was a cost worth incurring, that he had to do it. And Mike Johnson, the Speaker of the House, who has been close with Trump, had been campaigning heavily on his behalf, said he has seen evidence that an executive order as to mass deportations was being written up, was being moving forward, which would seem to back that. However, of course, as we knew in his first term, Donald Trump could say one thing and then not do it. He changed his mind a great deal, and that could happen with mass deportations as well, given the political stakes, but also how complicated it would be to do this, and the potential cost. But right now, the president-elect is saying he is going to go forward with them.
And of course, we're looking to key appointments as well, Brian. We've just seen President Trump naming Susie Wiles. He's referred to her as the Ice Maiden as the chief of staff, and she's a veteran Republican political operative, right? We're also hearing murmurs of, other key roles. Certainly a lot from RFK Jr. as to his role potentially in reshaping healthcare policy.
Yeah, Susie Wiles was announced in a statement today as the White House Chief of Staff. She would be the first woman ever in that role. She has been key to the messaging of the Trump campaign and was viewed as somebody who tried to keep the president-elect on message. We've heard other names, a number of people we've been hearing for the cabinet, and Elon Musk is someone whose role that he will have a strong role in the transition and at the White House, but of course not necessarily a cabinet position given that he runs businesses. So what his role will be and how he will influence the White House are key questions that we'll be hoping to get more information on in coming weeks.
Bloomberg's political news director Jody Schneider there with the latest. We have more ahead on the Asia trade. This is Bloomberg.
case you missed it on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Let's take a look at ANZ, one of the so-called Big Four banks in Australia, now falling by more than 1%. Full-year cash profit was out a little bit earlier, 6.7 billion Aussie dollars. That's about 4.3 billion US dollars. That was a miss. Also down 9.3% on year. The dividend was also cut, 83 cents a share, down from 96 a year earlier. Intense home lending competition weighing here, also impacted by the acquisition of Suncorp, so ANZ slipping in the early going. We have more ahead on the Asia trade. This is Bloomberg.
We spent some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Names that move markets are on Bloomberg.
At the moment, full-year cash profit was out a little bit earlier, 6.7 billion Aussie dollars. That's about 4.3 billion.
On the right track of disinflation. You know, we come from very high numbers, as high on average for the whole of the euro area as 10.6%. And the latest reading we had for the inflation in September was 1.7.
Nobody covers business like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Getting some breaking news out of Japan. It is household spending data for the month of September. A bit better than expected. Still a contraction, though, of 1.1% in September. The survey, though, was for a contraction of 1.8%. So maybe signs of stirring signs of life, of consumer confidence in Japan. We do have CPI currently running at about 2.5%. The next Bank of Japan meeting isn't until mid-December, but slight improvement there in Japan household spending in September, even even though it's still a contraction, 1.01%, Heidi.
Yeah, it kind of builds a broader picture that is trending in the right direction, as you say, given that we had some pretty solid wages data coming in yesterday as well. It would certainly build that case for the Bank of Japan to continue progressing that policy. But take a look at what we're watching when it comes to this Friday session. What a week it has been. We had that Fed decision, the Fed rate cut by 25 basis points, almost kind of in the rear view after the election mania, but we did see the best Fed day that we've seen all year. We've seen really stocks and bonds rallying. We saw that decline in the US dollar as well. Take a look at what we're watching when it comes to this part of the world. Aussie stocks put on about 0.8% there. We're seeing Singapore traded Nikkei futures also looking pretty positive, and S&P futures there just more or less flat at the moment as we continue to see this kind of risk on across most, if not all, assets. This cross-asset rally that we saw in the US session overnight, lifting stocks, bonds catching up, commodities as well. We're seeing oil trending a little.
Like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever.
Of course, the big wild card is what happens when it comes to Donald Trump's fiscal policy.
Yeah, we'll get back to that in a moment. Just got another alert on the Bloomberg terminal as well. The HKMA, the Hong Kong Monetary Authority, also easing policy there in line with the Fed. So the HKMA lowering rates by a 0.25 percentage point takes it down to 5%. So following the Fed in lockstep there. But of course, Hong Kong does have that currency peg with the greenback, so that might come as some relief for businesses and homeowners in Hong Kong. Well, let's get back to Donald Trump's return to the White House. It is expected, obviously, to complicate the outlook for trade. The president-elect threatening tariffs of as much as 60% on Chinese goods, and that's a level that Bloomberg Economics predicts will severely damage trade between the world's biggest economies. With us now is Deborah Elms, head of trade policy at the Hinrich Foundation. Deborah, thanks so much for joining us. So let's start with this idea of tariffs on China. I've seen a couple of notes today from Morningstar, Macquarie as well, saying, look, the tariff burden might not be as high as 60%. That just could have been campaign rhetoric. What are your expectations around where we head with tariffs on China?
Up. And up significantly. I don't think this is one of those areas, trade in general and tariffs in particular, where we can think there's a gap between what he said and what he will actually do. I think one of the signature issues for Donald Trump is that tariff is the most beautiful word in the English language, and he intends to use this tool wherever possible. And if he's threatened over 60%, but I would expect 60% tariffs to arrive in very rapid order on most or all Chinese imports into the United States, and tariff escalation on the rest of the planet. Not at the level of 60%, but you know, he's threatened tariffs for a whole lot of reasons. He will implement them.
Well, it sounds like an inviting policy on the surface, but of course there are always unintended consequences when it comes to tariffs. What do you see as being the potential blowback here?
Well, if you're an American consumer or a business in the United States that buys anything from abroad, any goods from abroad, your bills are about to increase because you're about to pay a minimum of 10% more for basically everything that you might buy that would be imported. Could be as high, again, as 60%. That is a level of economic disruption that I don't know that Americans are prepared for. And it will create real challenges in the rest of the world where the U.S. has remained a very strong final market. And so then if the U.S. is buying less, which is what I would imagine would happen in the face of sudden price shocks, then where does that output go? And how do we get economic growth in the rest of the world? Diversification sounds great, but the reality is that the U.S. market has really driven a lot of activity certainly across a lot of Asia. So where do we go from here?
And I do wonder, where do we go from here in terms of the trade pacts, right? Because we know, of course, under Trump 1.0, we saw the U.S. being withdrawn from the TPP. He's threatened in the past to withdraw from the Indo-Pacific Economic Framework as well. Do you expect more of the same, particularly as you say, you know, the mandate he has this time around seems so much stronger. It looks like he might be the first, he might very well be the first Republican president to win the popular vote in 20 years.
Yeah, I expect significant damage to be done to trade relationships. I think the Indo-Pacific Economic Framework, IPEF, is too small and too unknown to Americans. I think his first target will actually be NAFTA, the North American Free Trade Agreement, now called USMCA. I expect that there will be a proclamation issued out of the White House, potentially on day one, about the withdrawal from USMCA. That would trigger a 6-month frantic renegotiation, which is already due for 2026, but I think for Trump, it's a really easy day one, very powerful symbolism kind of trade action that he can easily implement with a proclamation.
You've mentioned and written about the fact that you think that tariffs are just only the first part, right? What do you see in Project 2025, if it comes to fruition or not? What do you see in that document that, tells you about the more important economic priorities and trade priorities that might be at play here?
Well, I think one thing that's important to note is that Trump's main economic advisors, while he changed his cabinet like crazy over his first administration, his economic advisors have remained unchanged. And in particular, Robert Lighthizer, who set up a lot of Trump's first-term trade policies, including the Phase 1 agreement with China and the renegotiation of NAFTA, is driving the economic policy in Trump 2.0. Now, what position Lighthizer will have is a little unclear, but in the transition, he has been really driving the intellectual thought around this. And for Lighthizer, he is in alignment with Trump that the world has been ripping off Americans and that the key goal of Trump 2.0 is to reset that balance, to use the strength of the U.S. market to force partners to do what the U.S. wants and needs them to do in order for the U.S. to gain the largest set of benefits out of that. That's a very different world than the world that we've been living in. And in a Trump 2.0, he has a whole lot more opportunity to do what he wants with no constraints.
Not the whole world's been ripping off Americans. I mean, I give Australia as an example that runs a trade deficit with the United States, but at the same time, China is obviously Australia's largest trade partner. So where do you see other countries being caught up in this posturing between the US and China?
I think it's going to be very challenging. I sit in Singapore, and one of the things that the Singapore government has said repeatedly is don't make us choose. Don't make us choose for a variety of reasons and in lots of different contexts. That problem of don't make us choose is going to be on steroids starting in January, because it will be increasingly difficult for a trade-dependent region and for trade-dependent economies like Singapore, like Australia, to be working with the U.S. and working with China. And I think what that balance looks like is still unclear. Obviously, everyone is going to be watching it, but it will be hard to avoid making choices. And I suspect that time to make choices is much shorter than people imagine as well.
Deborah, always great to chat with you. Deborah Alms, Head of Trade Policy at the Heinrich Foundation. I have a feeling we'll be having this conversation many more times over the next 4 years. More ahead on the Asia Trade. This is Bloomberg.
The top names in business are on Bloomberg.
I've made so many mistakes in my investment career. One of them was I sold all my NVIDIA, probably in somewhere between 800 and 950. I think it's 1,300 on that stock now. I own none, and I own none the last 400 points. It was a big mistake.
Nobody covers business like Bloomberg. Context changes everything. The Fed decision under surveillance with the fastest coverage and exclusive analysis, including
to be working with the U.S. and working with China. And I think what that...
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
I think they're still going to cut again in December. That said, the Fed wants to start talking about calibrating rate cuts to the economy, and they're not going to be wanting to pull rate cuts, do as many rate cuts sequentially, I think, in 2025.
The devil will be in the details, I think, both on trade policy and fiscal policy. And I don't think they need to make any big decisions at this meeting or the next meeting about how they'll strategize for 2025.
How do you get from here to there? Yeah. It could be a number of quarters. You've got to preserve the economy in some sort of steady state. We're too high right now.
Going forward, it's all data dependent anyway. There's not even probably going to be strong forward guidance for December. So, forget about 2025 in terms of forward guidance.
Some of our guests, they're looking at what a Trump presidency may mean for upcoming Fed decisions. Take a look at how we're shaping up when it comes to cash trading underway, which is about 40 minutes into the start of the session here in Australia. The ASX 200, pretty solid gains there of about 1%. We have seen also a little bit of respite when it comes to the dollar rally there as well. Having said that, the Aussie dollar is still trading a little bit softer at 66.75, despite the greenback holding on to those losses in the Thursday session. The Fed cutting rates, avoiding providing really any significant clues on the future pace of rate reductions, and really refusing to be drawn too much into the political uncertainty in terms of the implications for the Fed's path forward, given the expectations of Trump tariffs, moves on immigration, as well as tax cuts as well. Taking a look at how Australian bonds are trading at the moment, we also did see the move when it comes to treasuries overnight. Bond traders kind of ignoring the Fed rate cut mostly. Still, that focus on Trump 2.0 was really what was at play there. The little indication we got from the Fed and Chair Powell future rate cuts going forward really was a disappointment to these bond traders. We saw a little bit of a rebound in Treasury markets, yields dipping slightly, but there's not a huge expectation in terms of strategists that see this as a start of a new trend lower. Bond markets do expect the Fed to cut again in December, but there's a great deal of uncertainty when it comes to the impact of Trump's policies on the economy, on rates as we head into 2025. We heard from the likes of LPL Financial saying that, not much of what we heard from Chair Powell moved against the recent massive repricing that we've seen in the bond markets. Let's get to the market action here in Asia. And of course, Wall Street had the best Fed day across multi-assets this year. Garfield Reynolds, who leads our Markets Live Asia coverage, joins us now. Garf, it's a funny sort of place for the market at the moment, right? There's the, Trump trades are obviously still playing out, and they may still do so for some period to come, but a lot of uncertainty in terms of the economic outlook.
Yeah, well, I mean, there is uncertainty now still about the economic outlook. The uncertainty that there isn't, that's gone away, was the uncertainty we had about the political outlook. And you have to look at what's gone on this week in that context and say that things like, there was a bit of a dip in Treasury yields going into it. Stocks certainly lost momentum going into the election. And now, I would have expected if, of course, this now sounds like a silly thing to say because the result was so the other way. But if the Democrats had won, probably you wouldn't have seen as strong a gain in the stock market, but you almost certainly would have seen gains provided there was an uncontested, clear result. And that's what we've got. Traders were taking money off the table or keeping some off the table going into the election. Now they know what's coming, and they're free to bid stock prices up. In particular, bonds reacted strongly on the day with yields rising. It was understandable there'd be some pullback. I do think the Fed helped with that pullback by, sounding reassuring that they're sticking with their current path. But if you look at the trend in yields, that, as you were saying, that strong uptrend in yields as we'd had a repricing in the expectations for Fed rate cuts, that is remaining in place. Swaps traders are still looking at 75 basis points of cuts probably next year, after another 25 basis points probably this year. So a lot of that is back to where we were before the election.
A Trump trades are obviously still playing out, and they may still do so for some people.
And in terms of knowing what's coming, Chinese policymakers do as well. What can we expect to see from not just policymakers, but also market reaction in China today?
Well, Chinese markets are pretty well primed, to move higher on these expectations for more stimulus, or at least more details on the stimulus out of the NPC. There was an expectation going into this U.S. election that if there was a Trump victory, they would err on the side of more stimulus rather than less. So that's the expectation. We're likely to see some buoyancy in Chinese stocks and bonds, perhaps early on. The question again is whether they are able to meet some of the market's expectations. And in particular, a lot of traders and investors are fairly impatient. They want to be sure of what's coming, and they want it sort of now. It might well be that the headline figure for how much stimulus is going to be coming is above the 10 to 11 trillion yuan that have been floated previously. The question is, over what time frame? If they say, oh, it's going to be 15 trillion yuan, but that's over 7 years or something, whereas before people were expecting 5 years. Does that bring with it the risk for a sell the fact moment?
All right, Garfield Reynolds, who leads our Markets Live Asia coverage. We have more ahead on the Asia Trade. This is Bloomberg.